only to a degree of hedging that which I already hold. However, bear in mind, TLT shorts, USD Korean ones are likely to be automatic hedges. So as I say, I'll treat that discretionary come the moment and subject to the performance of those other and the setup, technical setup of those other markets that I've just described. Gold to go strong to the doorstep of 2.9, likely to just run it, I would imagine. I don't feel it will be allowed in any way to run the 3,000, but if it got super disorderly and you had a once-off major spike, I would see that you're stopping before that. I truly don't feel they'll want that to happen. It took a while to bring under control. You could have a blow off there. My guess is somewhere in between these targets of 2,880s and the low 2,900s, somewhere.
The speaker anticipates gold's strong performance, projecting it could rise from $2,880 to the low $2,900 before facing resistance and a potential reversal. They suggest that while a disorderly spike could temporarily push prices higher, it is unlikely gold will reach $3,000. Instead, the market is expected to turn around within this range, with momentum potentially slowing as control is reestablished. The speaker emphasizes the importance of monitoring technical setups and broader market conditions to adapt strategies accordingly. The speaker, Francis Hunt, a well-known trader and market analyst, analyzes gold's price movements, emphasizing the importance of the $2,000 level as a key technical milestone. They outline gold's historical resistance at this level, with multiple rejections before a breakout and subsequent setup above $2,000, which led to a strong, high-momentum move. This breakout offered an ideal trade with minimal risk and significant reward, contrasting with later, more volatile patterns that were harder to trade. The speaker highlights the importance of recognizing setups with low volatility and explicit risk-reward dynamics, mainly through their HVF, Hypertrophic Volatility Funnel, method. They also discuss broader market behavior, noting that gold's price could experience a localized high and potentially enter a prolonged period of consolidation, similar to past patterns. During such times, traders may find better opportunities in other markets, such as energy, cryptocurrencies, or indices, rather than focusing on gold's limited movement. The speaker underscores the value of strategic market selection and understanding price behavior to optimize trading performance over time. Let's dive into the video for more insights. If you enjoy the content, don't forget to give us a thumbs up and subscribe to our channel for the latest updates.
There is the first HVF winding up structure after breaking the 2K, and we said the thousands are going to be seminal here. Don't forget, let's also just take you up to a 3-dayer and get the bigger picture. Some of you might need reminding. I have a mental movie of this one because I lived it the whole way. Some of you others will also do, I'm sure. But don't forget, we had 2K as a technical level for quite an extended period. There's your first rejection, there's your second rejection, there's your third rejection, there's your break and your setup on and above and just around the 2K level. That was probably your best high momentum, fast moving breakout trade that took you quickly away from your stop. Do you understand the value of that? The rising wedge was now too many people chasing in along the bottoms. And even though you got the break up to the upside, that move was not as easy or as comfortable, and you got a hard sell-off during the period of dollar dominance over there. You can see that the setup under the HVF method was in fact the best. By the way, this risk reward is standing to be made and is 37.66 on the making. This has stayed there since that first setup was drawn. I've covered this with Elijah. I've covered this with Patrick. I'm talking about the Franklin Mint guys, SD Bullion, Tom from Palisades Radios. All at some point have been discussing with me the future for the gold price and got these numbers. By the way, go see XRP if you're interested in crypto, why these targets matters. Even after making a substantial target, the price behavior is still behind that level and may even be a turning event coming not too far off. I'm going to refer back to that. But first, let's answer, where did this target come from? And what you'll note is that that has a target that runs you from the low of the continuation pattern. This was an upside continuation through our broadening structure theory that you will learn and see and get the value of in our program. Click below to learn it direct from the only person that's done any form of clear-cut theory on broadening structures in terms of tradability, entries, risk rewards, and how to maximize. It's not our favorite. We like the squeeze, the low volatility. We check what happens in the higher volatility expanding patterns because we are specialists in volatility and patterns. Note how this pullback only really just, not even fully, to the splitter before making a move up. This was showing the setup was getting ready to break the 2K level. You now stand at 2,750. The projection from here all the way to there came from down here. I might even have to go to the weekly to show you that. I don't want you to think that we've sucked these numbers. This chart hasn't changed for a long time, by the way. So these draws have been on here and these targets have been provided for an extended period. That's not to say we haven't also called far bigger numbers, but you've got to trade day for day and week for week. And what I suspect will happen is that you're about to have a little bit of a localized high. Even gold turned here and you ended up sitting for 6 months before you meaningfully went significantly higher. In fact, it was more than that. I'm thinking of the Bitcoin. That was August 20, right the way through to 24. You sat for the better part of 3.75 years, 3.5 years, going largely sideways and failing to be significantly higher. And 99% of the time you were lower until this event. Don't tell me that doesn't matter to your performance, the time and concentration you give to a market. You can go away and focus somewhere else. Focus on the energies, focus on the cryptos, focus on the indices. There will be other setups that will be doing stuff. It was not the 3.5 years you wanted to be focusing on gold. It was chop and churn. Of course, small time frame traders might have found a little bit to do. Most of them don't make money in the long term.
The speaker, Francis Hunt, discusses potential strategies for navigating a period of dollar dominance and market instability. They suggest considering short positions on debt markets, for example TLT shorts, and long positions on the US dollar, mainly through trades like USD Korean won or shorting the Australian dollar against the US dollar. These trades could prove profitable when gold prices stagnate or fall. The speaker anticipates that gold might face price sell-offs and recommends hedging strategies, noting that dollar strength and a collapse in debt markets could create favorable conditions for these trades. Looking ahead, Francis Hunt predicts that gold could peak from $2,800 to $2,900 before experiencing a period of stagnation or decline. They suggest that gold's upward momentum might slow down by mid-March, with the possibility of a blow-off top if the market becomes disorderly. However, they do not foresee gold reaching $3,000 and expect a reversal in the $2,800 to $2,900 range. While the speaker remains optimistic about gold's long-term potential, they acknowledge the possibility of short-term volatility and advise staying flexible with trading strategies. Now, let's dive into the interview.
You might want to consider dollar dominance a potential threat and risk off on equity markets. Certainly, you might want to even consider shorts on debt markets, longs on dollars. So the USD Korean won trade will be a great trade to hold when you take your gold trade off. It will make up potentially profits if there is dollar strength in a disorderly fashion. TLT shorts, for example, will also make plenty hay in the environment that gold is not going up. You see, the beautiful thing about this market is when gold stops running, you're probably looking at dollar dominance and debt collapse. Shortage on the debt, shorts on the debt markets, and dominant dollar trades will serve you very well. And we've provided two ideas. You don't know everything we do from the community, but we provided two very good ideas in shorting TLT and longing the USD Korean won or the Australian dollar, shorting the Aussie against the dollar. That will make you money in the time frame that your gold might be facing price sell-offs. So there you go. What day will it be? It needs to happen before the 17th of March, this target make. Otherwise, we will be closing this trade. It is performing ahead of schedule. If it were to continue in this general gradient, which I would characterize like that, and if we were to do it all the way, we would probably be somewhere during February that it'll top out. Remember, you might get a small blow off. I would expect the 2.9 to run a bit of chop and churn, and then you might start to have a bit of decay, and then this kind of thing could happen, and it could coincide roughly with the March timeframe. By the way, I don't have any technical reason why March has to be that thing, apart from what I'm seeing here, which tells me the trade would be closed mid-March at regardless where it is, and that could be a potential trajectory for gold during that period, and it could lead to a progress decay period, a little bit of loss of momentum, possibly if it's a deep economic crisis, you may even get some degree of head and shoulder here, a rally, and you might find, and this happens quite often, the HVF funnel serves as a neckline, and you could sell off even more if it was an extended, really intense one. Again, this is not going to affect my investment. It is going to affect my trading to the long side, and if it gives an excellent setup, as an investor, I might hedge slightly. I did say I wouldn't short. I might, under certain circumstances, if I think the critical nature of it, only to a degree of hedging that which I already hold. However, bear in mind, TLT shorts, USD Korean ones are likely to be automatic hedges. So as I say, I'll treat that discretionary come the moment, and subject to the performance of those other and the setup, technical setup of those other markets that I've just described. Okay, so there you are. Gold to go strong to the doorstep of 2.9, likely to just run it, I would imagine. I don't feel it will be allowed in any way to run the 3,000, but if it got super disorderly and you had a once-off major spike, that would be, okay, a little bit my B case scenario. I would see that you're stopping before that. I truly don't feel they'll want that to happen. However, if it was going up super fast and it took a while to bring under control, you could have a blow off there. My guess is somewhere in between these targets of 2,880s and the low 2,900s, somewhere here is where you're likely to have the gold market turn around, as I drew in the initial instance. And thereafter, quite a lot of time, can't tell you how much, I'm not a clairvoyant, I'll wait for patterns, may pass before you are making new highs again. This could give fresh opportunity.
In conclusion, the speaker emphasizes the need for strategic diversification in asset and trading approaches, particularly during economic instability. They predict that gold will experience significant volatility soon, with a potential peak in the $2,800 to $2,900 range before a possible consolidation phase. The speaker suggests that traders should remain adaptable, focusing on various markets such as debt and currency trades when gold faces sell-offs. Overall, the message is one of caution and flexibility, balancing short-term opportunities with long-term investment strategies. How do you assess the potential risks of central bank digital currencies, CBDCs, in light of the current financial landscape? What key indicators do you look for to determine when gold might enter a consolidation phase or experience a reversal? We'd love to hear your thoughts in the comments. If you found this video helpful, give it a thumbs up and subscribe for more updates. Thanks for joining us on this journey.